Hey, Brad and Dan, what's going on?
Scott, thank you very much. Brad, great to see you back on the Wednesday circuit with me.
Happy Wednesday. Boy, they come around quickly, don't they?
Well, as you and I get older, they're coming around faster and faster. Ladies and gentlemen, thank you so much for joining us for our Q&A webinar. We are grateful that you are taking your time to spend with us on this Wednesday, and we hope to make it productive and informative. Before we get started, Trade Ideas is not a registered investment advisor. We are a technology company, and all the information that you're hearing at Trade Ideas is for informational purposes only, educational, informational. If you want to talk to a registered investment advisor, please do so on your own accord. So as I begin, and we do this a lot, we kind of bounce back and forth from the presentation back. I sort of want to do something different today, and I want to explain why I want to do it differently. So we talk a lot about stuff that we're doing, what's going on, et cetera, et cetera, et cetera. But I want to maybe switch the format today and have you guys fire away questions at us and see if we can focus more on your questions versus us just telling you stuff, because there is stuff for us to tell you, but I'm just trying to switch it up a little bit. And again, usually we spend a whole lot of time just talking and talking and talking, but I want to do more question answering. Brad, what do you think about that?
Yeah, I think that's good. You know, I've got the question panel popped out, and it just allows us to kind of show you in real time, kind of, you know, the answer to your question.
Okay, Brad.
Yeah, John. So we are working in the lab on anchored VWAPs. That is something that we're going to be bringing to you both as a filter as well as analytics on the chart. And I really would expect, I thought they'd be out in April, but I really do expect them to be available in the software next month. Brian Shannon, a good partner of ours, is someone that has given us the intellectual capital for these particular analytics, and also giving us some strategies to incorporate into the software after we have those completed.
Other questions? By the way, if you guys are looking at my screen, I'm on the social media channel, and you can see that there's a lot of earnings stuff happening, okay? And there's some pretty big moves after hours. Look at this, Brad.
That's a huge move, big percentage.
While the economy is picking up, you cannot fight a very strong.
Well, it's probably a good point to look at. Like on that single stock window right there, you've got that earnings date, and the earnings date has a value of 0.75. And so for the people that may not be aware, that actually has some significant value. It's letting you know that because the value is less than 1, or between 0 and 1, that the earnings announcement's happening today. And then more specifically, the 0.75 value is letting you know that this earnings announcement's scheduled for after hours, which is happening now.
It's almost like we might be able to tooltip that better, Brad, you know?
Yeah, well, we have some ideas that we're going to be working on that as we start to bring in the dividend date as well.
Yeah, we're doing a lot with the single stock window. So Scott, you don't have to learn all of that kind of stuff. We have everything detailed on our website, and also very big YouTube links and things like that. But let me just give you I want to give the big takeaway of the difference in our technology from everybody else, okay? I'm going to show it real quick. So here we have an event, okay, and it's called Unusual Social Activity, that showcases the fact that we not only track normal data from the exchanges, but we track real-time, unusual, unstructured data like social activity, okay? So I right-click, and I go to Backtest Strategy, okay? And this brings up a window where you can simulate a buy or a sell that, for example, if all of these events were happening, and this is, when you configure this, it's not a very complicated window, it's just, I'm going to show you the window-specific filters. So up 5%, up 0.5%, here from the close, half from the open. Unusual activity of 200, meaning it's being talked about 200 times more than normal. You know, maximum price and some volume. So you have this information. You can tweak all of that exchanges, and you can put it on your own symbol list if you wanted to. All of that is available. Okay. So when I close that, this is just so you can see how these things came up. In fact, I can have this thing where I can say columns and type, and you'll see the exact move that triggered the alert. So these are what's called the running up now. You know, Facebook after hours reported very good earnings, and here it goes. It's continuing to go higher. So the question is this a good move, or is this just something you see, or is this something that is a tradable move? And here's how you figure it out, and this is what really separates us from everybody else. Okay, you backtest the strategy. Here, start time, end time. So in other words, started the open, ended the close. I'm just giving you a very broad perspective, meaning that as soon as the market opened, you're going to trade, and end time, meaning when will you put on new trades. So here, you're not going to put on new trades at the close. So I'm going to change this to, let's just say for talking purposes, 11 o'clock. Okay? Everybody with me? Does everybody follow what I'm doing? Because I'm talking about Scott's question in general, but everyone hopefully is following me. Okay. So then, timed exit. In other words, how long do you plan to hold this? Now, these are things that we ask because a lot of times people don't really realize that's part of the whole aspect of the question. Like there's the entry and there's the exit. Okay? So exit time, 30 minutes. You can say end of day, like an all-day hold. Or if you want to, you can try even a swing. You can say at the close, let's say 5 days tomorrow plus 5 days. So these are all things that you can do. So I'm going to see if this move is a good swing entry.
And don't feel obligated, Dan, but I did take the liberty of dropping in a couple strategies into your cloud. One was a base strategy and one was optimized. So if you want to show an optimized strategy, it's got some good results.
We'll get there. We'll get there.
Just letting you know.
So here you can see how many trades have taken place and what the software is doing. So in other words, we're running through simulations. This is the AI. This is what you really get that's different in trade ideas from the TC2000s and TradeStation and everywhere else. TradeStation does some backtesting, but not like this because we just ran through. Okay, how many trades? We ran through over 780 different trades, not one stock at a time, but through all these different trades. Okay, and this is what you would have gotten had you done this. Okay, it's from a swing perspective. You know, Brad, how would you grade it? Obviously, I mean, you know, you're talking about annual projection. It's crazy. Let's talk about dollars. Let's say you put in 3,000. Okay, see, like you can start to figure out like what is the right way to also trade stuff. Is it fixed dollar amount or fixed size? It's an interesting conundrum, Brad, that we always discuss. You know, it's not something that's advertised. Notice that if you're doing fixed dollar size here, you're not winning. But if you're doing share sizes, even 200 shares.
So it's really the difference between looking at a percentage move and a dollar move.
That's right. But the idea is that, of course, you can do both. Okay? You can do both, and we help you kind of see through it. So you can see also, this is the beauty of the calendar days, right? You can see like what happened, which trades, like if I go here, you can see, oh, well, which things didn't work and why. The advantage of what we're doing here is the speed, okay, is the fact that, you know, you can go back here and you can say run again, and let's say timed exit, and you can say, well, what if I held it 2 days? So you can kind of figure out what is the optimal hold time from that point of view. And that's, again, something that we do with the AI, and I'll get into that when we're kind of done showcasing. So Brad, where in my cloud, where did you put it? Bollinger Band bounds?
Yeah, that's it.
Okay, so Brad did a little homework for me.
Oh no. What happened?
What happened there?
Huh.
Bad homework?
Yeah, I don't know. Let me see. That's strange.
We have developmental versions, always some stuff going on. But again, notice here, and this is important for you guys to see, that it's 1,000 simulations that you have been running through. Okay, 1,000. Total trades, 1,064. 44% winners. This is your average winner to your average loser. You know, you can see what your projected annual return is if this maintains. So this is the real key. This is the big advantage of having Trade Ideas technology, and it's what lets you take information that we have and even run it past what we say. You know, it's beyond just the things that we say. You can test things yourself that you come up with and have some stuff that could even be better than ours.
Give it a shot one more time.
Okay. No.
Oh well.
Scott asked, is this just curve fitting? Well, we can't fit the curve. See, that's
the reason why it's not curve fitting is because we're using in sample and out of sample sets of data. So in the initial base strategy run, we've got all this data set, and what we do is we split up that data set initially, and we do the optimization routine on a portion of that, and then we take a look at how the results of that optimization are affected in the other sample set that we haven't touched. So that's one of the methodologies that we use to avoid curve fitting. Now, obviously, you can do some steps that will allow you to do what someone would call curve fitting, but the way the AI works is with the out of sample set, it completely avoids that.
Well, I think Scott's a little confused about what he's asking, you know, because he's saying, couldn't you just find any company that's reporting earnings? And I'm using this, remember, as a swing trade, and these were not all reporting earnings today. It just happens to be that this is what's coming up right now for today, but you know, the whole curve was much different. And you can see and test theories, and I'm going to give you an example, and we use this a lot. So let's look at the 20-day moving average cross, okay? So this is a common way to just test ideas. So here I have stocks between $5 and $100. And I can say, okay, I want the relative volume, meaning the time that the alert happens, to be 2 times as much, and for the percentage up move to be minimum of 1%. So it's kind of what Scott was talking about, but generally it's a positive move, okay? And I'm going to say, okay. So here you have 20-day SMA positive. And I'm going to hit OK. So here is what it looked like today. You know, see that move right there? But the question is, that's happened before. It happened here. It happened a couple of times here and here. The question is this good as a day trade or a swing trade? And this is what we let you find out very quickly. So from a day trading point of view, you can say, okay, how about 30 minutes? And again, just throwing it out there, let's see what happens. And again, this will lead to the AI and what we do and a lot of the things that that we're working on to improve. Okay, so here you have this situation where certainly for a very short-term day trade type of pick, it's, in this case, what do we say, time X is 30 minutes, it's not valid as a day trade unless you do some other things, which we'll get into. How about till the end of the day? So this is like what we talk about in terms of risk off, meaning finding a very specific entry environment, and risk on, holding it all day. And this can be even trickier, holding it all day. And again, you can see, this is why, by the way, what we do with our AI is one of the most challenging things that any company has ever tried to do, okay? Which is come up with a strategy that gives you profitable day trades. Day trading is challenging just by the natural scheme of things in terms of the amounts of data that's there and all the volatility. Brad, do you find any of those links that you wanted to throw in?
Yeah, it's strange. I've tried them all. I've loaded them up. They load up perfect for me. I don't know why they don't load
You
for
want
you.
to share your screen? Why don't you just switch to your screen first, since we're doing software?
All right, let's do it.
Go ahead.
Boom. Let me know if you guys can see my screen.
I can.
All right, perfect. Well, if you can, then everybody should be able to. So these are the two windows that I tried to share with Dan. This first one here, let's just look at this Bollinger Bounce window right here. This is what we call a base strategy. And the reason why it's a base strategy, and I'll go into it real quick so you can see what we're looking at. So we're looking at a stock that happens, the event that's taking place is it's trading below. And then there's a variety of filters on here. We can look at the filters that I have in place. Some minimum and maximum values for float, price, relative volume, and such. And there aren't too many filters in this strategy. So this is all that I have. It's not important right now what the specifics are, but I'll just go ahead and I'll run the back testing tool. And we're going to avoid the first half hour. We'll avoid the last half hour as far as initiating any trades. We're going to hold it for a little over an hour at 75 minutes. I have a stop in here. If it exceeds 50-cent loss, I'm going to get out. And let's just run it. So this is a buy. So let's go ahead and see how it's going to work. It's always good with a base strategy when we're starting this optimization process, and we use the same type of methodology when we're working with the AI. We want that base strategy to have some type of positive effect. We don't want it to be a negative strategy that we're going to try to, put some filters in and massage and make it a good strategy. We want it to start off good, and we want to make it better. So this is the base. It's an awful lot of trades. It's 684 trades over a period of, I don't know what I had it set. Let's see here real quick. Running it for 40 trading days. So, that's a lot of trades for that period of time. And that's why we call it a base strategy, because there's still some refining, some optimization that's going to take place. And this is kind of what happens with our servers every single day after the market. They go through all these different strategies that we have. We have about 50 unique strategies, a little bit more than that in these 3 different AI bases, or 3 different AI segments. And every day it's going to run through all these strategies and optimize it. It's going to look at what happened today, how does the data today affect the overall strategy, and would it be better to maybe massage a filter here or there, or change a parameter of that strategy.
Hey, Brad, why don't you, when you show, this is maybe a good time to actually show the AI Omni window so people can kind of see what all that looks like. And by the way, today happened to have not been a positive day, because in general, this has been some of the most difficult day trading, quote unquote, environment that we've seen, I would say, in the last 3 months. Brad, wouldn't you agree?
If you don't mind, let me transition to that right after I show the next window.
Okay,
because that'll lead itself right into the AI. All right, so this other window that I have right here is the Bollinger Bounce Better. It's one that's really been optimized. It's gone through the algorithms. It's looked at it's not complete, mind you, but it's kind of a work in process. So this is has a few more filters on it. If I go into configure and go into my, well, you can see all the filters that I have on here, which is a few more than before. If I scroll down, you can see I have a few more filters in here, mostly max filters, a few min. So now let's go ahead and run the backtest. And this is really the dramatic difference that you get by adding a few very pertinent filters to the base strategy.
Now, the thing I would want to tell everybody here is that what Brad is showing you, you don't have to do by hand when you are a subscriber to our premium service in the AI. That is what the AI is doing for us, okay? This is the kind of stuff that we're trying to work through. And again, that even with this kind of math, you're not going to be guaranteed, but the idea is that like card counting and blackjack, you are playing with the odds of what has been taking place. So this way you can hopefully be on the bigger side of the things when trend starts to happen. You can still be volatility through, but because like look at the period between, Brad, if you look at between like number 47 and 94, see that period? That's kind of a tricky period for this, but then it got going. And that's kind of what happens in real trading as well. You can have a period of, you know, weeks or even a few months where things are a little bit more challenging. And we want to be realistic with our subscribers and say that this is not like you come in here, buy, and instantly money starts, you know, popping out. That's never the case anywhere. You still have to work for it.
Yeah, so the backtester, the odds maker, we developed that about 9 years ago, 10 years ago, and yeah. It's incredibly powerful, but it's not incredibly easy to use, and that's one of the reasons why we actually put computers on the task of running this piece of code and determining how to best manipulate a strategy from a mathematical perspective. So there's a lot to the odds maker. I mean, I could go, you know, you could do a whole webinar on the odds maker with respect to its ability to optimize, but let me just show you one thing. Let me bring in the original base strategy here, because it'll just give you a quick highlight essentially of what the computer's doing that we're unable to do in a really effective way, and that's the optimization tab right here. And if this is run properly, when you go to the other filters tab inside of the optimization, you're going to have access to all the filters inside of trade ideas. And at the top, I think I have some of my custom filters. So any filter, whether it's custom or standard, you can use it as a way to peer into the data. So you're using this odds maker tool as a way to look into the data and see if you should actually remove the filter, add the filter, change the filter. Really quick, the way that it works, like price is a real simple example. It's taking a look at the available pricing points that I have in this particular strategy, breaking it up in $5 increments, and I can see each of those increments. What's the success? How many trades took place? What was the win percentage? What was the profit factor? The average winner? So it gives you that ability to look at data in a way that you otherwise couldn't do. And then when you couple that with all the filters that we have inside of the software, it's an amazing project to embark upon optimizing a strategy. And you know, you could spend days and days really refining and going through a single strategy. But what our computers do after hours, the number of strategies that it crunches is just immense. A human couldn't do it.
And that's the whole point, is that's why that's done, so that when you see the calls, you're not going through 100. And TS, I think, buddy, you're confused about trading strategy development, and I get it, because this can seem overwhelming. But there is no thing that you're looking for. They show me one successful intra-trade using the best strategy trading the SPY. I mean, listen, you're in the wrong place. If that's what you're looking for, you are in the wrong place. There are many people.
But Dan, I'd argue with that in that, you know, trade ideas, we've been doing this for over 16 years. We've developed a platform. We've developed something for everybody from a trading perspective. We've developed the manual transmission, the automatic transmission, the four-wheel drive. You know, if you want to uncover opportunities as you're trading in the market, this is the tool that you need. If you want help in finding opportunities delivered to your desktop, this is the kind of tool that you would want in the market. If you're the kind of gearhead that wants to build your own strategy and optimize it and backtest it, you know, that's something that we have for you. We have the type of alerting on the charting, so there's just simple types of price alerts. So if something starts to exceed a threshold, you can create that type of signal so that you can then turn your head to another strategy or another stock and analyze that. And when this thing breaks above it, you're going to be alerted to it. So, AI is just one component of the software. We think it's pretty killer because we've put a lot of time and effort, and we really feel like we're onto something here. But, there's something from day one. We created the alert window, which today has incredible power.
And the thing is that you can be one of these people that, decides to trade the S&P and try to feel that out, and that's all you do. There's some people that do that, and some of them, not a lot, do it successfully. But the thing is, the S&P has one type of percentage move in general, but then other stocks, like in the channels that we showcase and in the things that we show you with the software, I mean, you can have moves that are 20% in a day. Or Brad, pull up CPS again, the one that I talked about from last. And actually, there's that one. So here's an example of an AI signal. And again, we talked about that in the swing trading format. You're not going to give this kind of percentage move from the S&P, from where you saw that signal at 49 and it was just at 59. Okay. So, yes, TS, this is the wrong place for you. And I wish it wasn't, but you got to be a little bit more chill. So, not for everybody, guys. We've never claimed it can be for everybody. And like I said, if this bothers you in a way, then you don't have to be at the Q&A webinar. So. But I'm just trying to show you an example of what it looks like as it's applied. So here you have that example. You see the move afterwards. This is what we're trying to do in the bigger picture. One of the things, Brad, that Brad and I were going to be talking about today is the whole notion of paper trading, which is what we're adding to Brokerage Plus. Okay, so here, by the way, today is an example where we show you this was not a positive AI day overall, but you can see what it looked like. You can see the trades on all the three different channels. What were the percentage movers? What was the reason that you exited? And these are all intraday trades. So you get in and you get out, all intraday.
Yeah, just so that there's a little bit of context to what we're looking at right here. Inside of the options area, inside, you go to your toolbar, go to tools and options, and the AI trade size. This gives you the ability to configure the trade size that the AI is going to display and how it will translate into a equivalent dollar value. And so we offer 3 different ways to calculate it. Each one of these trades that we're suggesting here, you can either calculate it based on dollars per trade or shares per trade, or risk based on stop loss. And that's what I have right here. And essentially what it's doing, every one of these trades that's being suggested has a stop loss associated with it. And by putting a 50 into this value right here, that's saying that I'm willing to risk $50 if the stock was to get stopped out based on where that stop price is. So that's going to be my risk per trade. So that as you look at these were the signals that were generated, I have 3 different AI segments here on this view. So I've got our original Holy Grail that had 14 trades, 14 ideas today. The second segment, which is Holly 2.0, had 4 different ideas, and the third one had 7. But notice that these ideas on the first segment, Holly, it came from 7 different strategies, or is that 8? But 7 different strategies. And Mighty Mouse is a strategy that looks at more inexpensive stocks, something that's got a higher percentage possibility of a move, both up and down, because you're looking at extreme volatility on these cheaper stocks. On support, it's just like it sounds. It's a stock that is approaching its support level. If the market's breaking down and that strategy is kicking in, you need to be suspect of that. Topping formation, it's looking for a stock that it feels like it's hitting some resistance and is about to turn around. So these are the different concepts and ideas. And at the end of every day, the AI is going through each one of these segments and refining each individual strategy. So that means the Mighty Mouse strategy inside of the Holy Grail segment is going to be different than the Mighty Mouse inside of the Holly 2.0. And so It's possible you may get a similar, if Mighty Mouse strategy is called in both these segments tomorrow, it's possible that the Mighty Mouse may generate the same symbol, but it's more highly likely that it's not, just because the optimization process is unique with each one of these segments.
And here's something else, guys. Sorry, I had to get rid of that guy who, you know, looked like he was a shill from Black Box Trading or something. But you do not have to take every one of these trades. And that's the whole point, is that this is an opportunity for you to feel different things out. You're able to trade around, and we display it like it's like we take everything and from A to B. And I will be the first one to say that the last like 2 months have been very challenging, even for the AI, because of the volatility. Like, there's been a lot of sideways motion. When things trade sideways, it's very difficult to capture the trend, even when you're playing mathematically. So my point here is, if you guys think that this is the end of the road for the development and what we're doing, I mean, that's just not the case. We're getting it. We're moving into a much more efficient way for you guys to be able to participate by also working on expanding the time frame holds. And I've talked about this. Like, Brad, click on let's say that RENN, and let's expand the chart. Okay. So you can see that a while ago, certainly, this thing was at $10. I mean, and it's tried to bounce several times. I mean, it's been higher. But here's the deal. What if this was a buy point from which it started to creep back up through this level? Now, Brad, you can immediately set yourself a price alert above the gap. Yeah. This is how we take this information where we do the trial and feel for you, and then apply it to something that you can then use kind of in a continuous format. So let's save that. What you doing?
I just added a second one.
Oh, will you lift it up a little bit higher, just so that it's fully above, like just above the, no, I'm sorry. That over to the left, you see that wick? Just above the wick. The top, yeah. So notice Brad can move the alerts. So like right there, 353, 333. You can move that, and what ends up happening is now it's forgotten, and the software, like again, if you didn't get it, all good, software tried something out for you and showed you, like, hey, this one worked. But what's really cool is that now you will be able to be alerted to it. And in essence, this already creates kind of like a paper trading mechanism, but we're going to be improving this quite a bit. Brad, do you have your a window where you can see like all the stuff that your limit alerts window, basically, so you can see how much it's.
Yeah, I do. I have it on my other screen. Let me bring it over.
So this is kind of like our swing trading mode, okay, where you can try stuff and you can see how it is doing. And again, this is not designed, because look, Brad's short the S&P twice.
So for me, I'm not really utilizing it in the way that you're describing. For me, I use it as a notification tool. So oftentimes I'll go into like the S&Ps and I'll bookend it. I'll put something above, I'll put something below. And while it's meandering in its range, I'm not really alerted to it or noticing it. But when it peaks either above its range or below its range, that's when I'm going to get it. And so that's why I'm not really managing this like a portfolio, which it's really designed to be able to be, to do.
But you can, and we're going to be improving that and making it even better, taking it to a more swing trading type of a channel environment, where basically the software will get into stuff, keep track of the P&L for you like you are in the swing trade, and let you really piggyback it for a broader move.
Yeah, and it really does some great stuff here that's oftentimes overlooked. Like, you can do some sorting and you can see exactly how far away from the alert some stocks are. So maybe certain stocks are so far away that you just want to remove them from your list. So you can do the reverse sort, see which ones are above, which ones are below.
Roger, I want to add something to what you're saying. So it is a trick of the mind to think that if you could test something for a year, well, then it's working. Because one of the problems is a year's time what if you have like a complete W within the year? Up, down, and then back, down. It does not always help to increase the time frame. What it makes is it makes finding the things that are working even harder. The idea is that you test for like 3 months or 6 months, but you're continuing to always be testing. Is that, I'm trying to see if that makes sense, because people tend to want to find this thing where they can be in it and swing in it, or just, it's the magic bullet. Everyone wants the goose that laid the golden egg, or the magic bullet, and the problem is that does not exist. You will have to modify your strategy. Like if you're looking for bullish moves and you optimized it for a year, but then the market like starts selling off like it did last December, there's no strategy that's going to help you, because you won't know that there's going to be that crazy rebound. You just won't. And oftentimes you get, like, in fact, Brad, what you point, well, I was going to say that planet was a PLNT, I think you were on there. Okay, this talks about how, are you on the intraday? Okay, so our software is looking at stuff, and notice the buy signal on 1219, if you were in the swing trading part of it, it was a phenomenal signal, okay? But the software gave a sell signal a few days later because the stock had been consolidating and actually ended up breaking down a little bit after that. But there was a big rebound, and look at how that rebound took place. A gap, okay? So that is why, again, you really have to focus on being nimble and risk management. And that's what we're really trying to find ourselves, the path for you of being nimble, manage the risk so you can take advantage of these kinds of things, knowing, hey, this is above where we were below, and now it's really continuing, and modify your risk by adjusting the stops, which is like, again, what Brad's showing you here. Every single stock you see has what's called the exits for the day and also a swing exit. Like ConocoPhillips today crossed through its swing exit. So this is in some ways what you call like a panic sell maneuver. A lot of people, like the value kind of guys, they actually come in to buy it at this time. But the idea here is that you could see some more weakness. And Brad, I'll bring up a stock that I'm actually still long, but I want to show you how that played out in STLD. I mean, not STLD, X. Same thing. So X had now the swing exit continues to move with the stock. So we're on lows right now, so it's not really as good of an example, but this swing exit was right about.
Support is pretty close right here, and if you're getting this for longer term, support is close to be broken, but you just need to be aware at that level.
That's right. Okay, so the big gist of what I want to talk about today is this. Number one, there is no such thing as the goose that laid the golden egg, guys. There's no magic, wand. It takes work, dedication, and a sound strategy. That's what we are trying to work to help you automate too. And unlike many people, we show our mistakes. So when the AI makes money, and it did really well yesterday, but today it was a more challenging day. Why? You can look at, by the way, Brad, look at some of the reasons. Let's look at some of the things. Number one, of course, you've got, let's look at, what's the biggest loser today on the Holy Grail one?
On a percentage basis?
Just points.
Points. Well, actually, I've got this. Let me do it this way, so it's a lot easier to tell. I'm going to go to Tools, Options, Shares per Trade. We'll go to 1. So now we're not doing it really on a percentage basis anymore. So we can just look at, say, risk on. You say the worst?
Yeah.
dish. That's for that segment. I think COP was probably the worst for NEO, which I think is a great example because it allows you to see the different P&Ls that we keep track of, kind of lets you know what's the mode of this stock. Is this stock something better to be traded in the short term? Is this something that is better to be held to the end of the day? And it gives you that breakdown as to the P&L. It also gives you some visual reference here. When the signal's initiated, you see that blue line and that blue arrow. So that's this candle right here. Let me zoom in a little bit. The red line here is the stop. That's the suggested stop. So you can see this thing, didn't work out very well. It was on support. So it found support here and then just broke through, hit the stop, and never came back. And so it just gives you that nice visual so you can see exactly what your risk is as you're looking at that.
Yep. And again, how many people are not afraid to show when they lose? We never try to, paint the picture of this is like a one shot, one kill, and we're just slaying it. There's winners every day, but we're showing you what we do on a consistent basis, and we're constantly working to improve it. So that's hopefully one of the reasons why you're here. We're going to make it easier and easier for you to get in on some of the good trades. So one of the reasons I want to talk about, Brad, pull up CPS again. So what we're trying to really work on, guys, is creating this environment where when you get into a trade like CPS, you can stay in it on the swing trade and hang in longer term, because you can basically then say, okay, swing trade me this, and visually track your portfolio. So as Holly gets into stuff, even though she's exiting on the day trade like she did there, you can still turn it into a swing trading system all by yourself. It'll be a whole new channel. And so the idea is that every trade that Holly has been in, you will be able to follow on a swing basis visually too. So that hopefully something like this, it'll keep telling you, hey, this one's making money. Keep going. Let's bring up ATOS, and I think I've been in this one so many different times.
So what I did is I just ran a history on the Holy Grail segment for yesterday. So you can see the signals that were generated yesterday.
And look at where they are today. So that's the whole idea.
Yeah, and some really good stuff you can do. Here, let me change this real quick. Tools, options, general, and I'm going to do uncheck this highlight grid row. What I can do is I can just grab these symbols right here, hit Control-C, go up to Tools, create a symbol list, and let's create a new one, and we'll just say Holly 424. I'll edit it, and I'm just going to drop the symbols right in there, hit OK. Now I've got a symbol list, and I can create a top list with that. So new top list, go to my symbol list, find Holly 424, just select it. I don't think I need any filters in here because I'm just looking at a small group of stocks. Make sure I have the columns that I want to look at, and now we're looking at, and you can bring in all three segments into this, and then you can add some columns. That way you can watch how the Holly trades yesterday were doing, do your sorting, provide some really good info.
So Brad, can you close these windows and give let's go back to the AI, the way people see it. I'm trying to figure out, maybe do one at a time instead of Omni. Is that the easiest way, or do you think this is the easiest way for Jay?
For which one?
Well, Jay had the question of, there's so much stuff going on that we're showing, and we go fast because a lot of people who come into the Q&A have been here for a long time, so we kind of move quickly. But by the way, just on that note, Jay, we have a lot of education all throughout the week. So there's different levels and different educational concepts that you can tune into to learn everything that we're doing. How to open up the window, how to back test it, all that stuff. There is no technology like this on the market.
All right, so let me talk a little bit about. I chose Holly Neo, which is the third segment Holly AI. So this window right here shows you what strategies are in play today. When you start off in the morning, you have no idea what stocks are going to appear in these windows, because it's all about, these strategies are defined, but it's all about what stock, which stock the filters all meet and which event takes place at the correct time. And so when that signal takes place, you're going to see a new entry right here, and that's dictating and letting you know that there's a new open position suggestion. Now what you can do is you can always click on that, take a look at it, make a trading decision right there. We also have Brokerage Plus, which allows you to automate these ideas. If you want to put in your set of rules and instructions, you can automatically have it embark on its buy and sell and adhere to all those rules automatically. Once that trade, so each trade has a life, I guess, a time horizon, if you will. So on support is an hour-long adventure. That is, if it doesn't get stopped out, it's going to close out after an hour, and it's going to close out into this position, down into this window, but it doesn't necessarily mean that you need to get out of it. There are a variety of reasons why these stocks get closed out, and you can see that here in the exit reason. Some get stopped out, so you can look at MGTX right here, and visually you can see exactly what happened. The signal occurred right here at 1879. It went up to 1906 and meandered back down, and then it hit the stop. We've got some gradient color right here. That's letting you know, well, let me back up. We keep track of P&L in a couple different ways. We keep track in P&L in a risk off mode, which is basically keeping track of that P&L up until the time expiration of that trade. That means when do you get out of it? So that's your risk off profit. Then we have a risk on profit, and that's keeping track of your P&L until the end of the day, as if you hadn't gotten out of it unless the stop is triggered. And that's the risk on P&L. So that way you can see, is there follow through to that, or should you be getting out in a more timely fashion? And then we have a new column that hasn't quite made its way to the software yet, which will be coming shortly, and that's our full risk profit. That's not looking at stops. It's not considering stops in any way, shape, or form. So it's just saying, I'm get into this position now, and it's going to keep track of that P&L all the way to the end of the day, regardless whether it breaches through your stop or even breaches through your profit target. It's going to keep track of it with every tick. So keeping track of all those different P&Ls, giving you the reason why we got out of it in that short-term risk-off mode, but ultimately letting you decide whether you want to stick into it. We also are adding this new feature, which I don't think has made its way to the software yet, which is the re-entry. I could be wrong. It may be in the latest version that we put out. But the re-entry, let's take a look at what happened here. So let's zoom out a little bit. All right, so we can see here on this stock, on FII, Federated Investors, it was called out here about 7:55 this morning, Pacific time. Went up for a little bit, and it came down, and we got out of it right here. We got out of it in a reduced risk mode, and that's saying that we're not going to hold it to the end of this time stop. We think it's just not doing what we thought it would do, so we're going to get out. And we got out. And then the stock proceeded to breach through its stop after we had gotten out of it. So if we look over here, well, I changed it to $1. It would have said $50 when I had the risk. That would have been my loss right here at the risk on mode. But we have that re-entry algorithm, which is halfway between the stop price and the original entry price. So at 10:33, right here, it hit that price point, and it was suggested to get back into it. And so what started off as a bad trade ended up probably being a break even or a little bit of a profitable trade based on re-entry. So there's just so many different ways to look at our signal, but trading is a very dynamic endeavor. A lot of variables are attached to every decision that is made. You know, what's going on in the broader market, what's happening in the stock, are there earnings, where's the support? And there's just a lot of different, variables that take place.
And we do all these things that are the nuanced things, like Brad said, like when you get in, and if you're stopped out, if it gets back into the direction, we try to get you back in. These are the hard things for people to do because, you totally kind of lose things. So it's hard for people to keep track of things. We are the database experts, so this is what we are good at. We keep track of things better than anyone else, and that is why you are here. Are there, like, we've gone through so much, are there any other questions? Because we're right at the end of our time. Yeah, and the word strength is a little bit, you know, nebulous. Brad, do you want to put the thing on, or do you want me to take it? The PowerPoint? Okay, perfect. Thank you. Go to number 4. So, and just really quick, I mean, you can take anything that's up, like you can back into anything that's strong. The question is, that's not really what we want. We want weak to strong or strong continuation. And when it's strong continuation, that's a lot trickier to do, you know, because, and by the way, we also work with fundamental data. Like when we're testing stuff, fundamentals are a part of the thing that we are testing. So it's nuanced and it's a lot trickier than people think. If it was easy, everybody would be doing it. So, and I really suggest stick with us because you'll see all the different things that we do. And yeah, there's tons of videos on YouTube, and we have webinars and education all throughout the whole time, throughout the week, from beginning to advanced. This is kind of like I'm the CEO, Brad's the COO. This is, you get to meet the executives and also know that we're still involved and passionate in the business. So that's one of the things that we do, and we are grateful that you are here and with us. I mean, gratitude for your time. That's one of the things that makes us be excited about what we're doing. And a potential IPO, 2020, look for that. So that's something that could be on the horizon. This is how much our software costs, in case you're interested. We do it monthly, but this is your per diem to give you an idea of what you're really, you know, what is it that you're paying? Multiply 365 by any one of these numbers and you see the annual, or the standard versus premium is the premium has the back testing, and there's one more additional thing for Brokerage Plus is a one-time fee of $1,100 if you want to trade.
The AI too.
Huh?
And the AI.
And the AI, right. So the premium has the back testing and the AI, and if you do an $1,100 one-time fee, you get the fully automated trading where the AI will trade the software for you via Brokerage Plus. Enter, exit, do everything. So whatever it does, you will get, but of course you can also then trade around it. And we're going to make the trading around it. That's one of the things that we're going to do that's going to be even cooler as we progress forward. Next slide, Brad. So one of the best ways people say, how do you get started with this stuff? I cannot recommend Barry's trading room any more than I'm saying. It's a fantastic way to get started. Barry also is a trader. He doesn't trade everything from the AI, but he's participating in all functions of trade ideas, from the back testing to the windows. And there's a whole meritocracy of other investors who help one another out and take it to a higher level. So it's very positive win-win environment, and it's free. So if you're window shopping, that's the best place to go. Barry will give you all the support that you need to progress from there. We do a Friday podcast. Podcast, the Trade Ideas podcast, where Jamie and I come in, talk about a little bit more on the lighter side of trade ideas, but we also tell you some, you know, fun stuff, a lot of development stuff, technology, culture, all those things together in one place. Of course, other information available, trade ideas to help you navigate the market, this free ebook, because at some point the market will have a big downturn like it did in December, which was incredibly profitable for myself because I was trading the downside at the time. And this is a great way to help you to get started. And of course, last but not least, we are very easy to get a hold of at Trade Ideas on Twitter, at QuantBot, at Today Trader, all our Twitter accounts, Facebook. Please like us there. You can call us or send us an email, and we'll be replying to you quickly. Thank you, everyone. We are super excited to have had the opportunity to speak to you, and we hope you enjoyed the presentation.
Thanks, everyone. We'll have a recording up later on tonight or tomorrow. Have a good one.
Have a good one. Take care.